TGIF Warriors, you know, Mark Twain once described a gold mine as two liars standing over a hole. I wonder how many there'll be standing over Jackson Hole. So, looks like maybe the transcript is leaked. Is that true, team? S&P's up big, gold up, everything up. That's what the hope is for with lower rates, everything will pop. So how are you, AJ? James? Victor, how are you? Good morning. And Bran, if you like the far out interviews like with Ben yesterday. Hi, Kman, Glenn, Mike, a lot of people here today. So mooning, Dale. The moon was Tuesday, right, buddy? Paul, how are you? Dip buyers, yeah, okay. They're not going to go away till we're at 6,100, are they? Okay. Anyway, I wanted to start off with WTI, which came right off support. Went for it yesterday around 73. It's not a reversal week, but you know, if you can't make money when you're up $2 in oil, there's something wrong with you. Okay. So, you know, you have to learn to take partial profits then. So the plan was down there to get long with reverse out stops under the 72 level. It's a very hard thing to do. Most people have a real hard time taking a loss being long and then reverse going short or vice versa because, you know, they want to, you know, mourn the loss and, you know, recover from the loss. You know, someone was, you know, saying how exciting it was the dollar decline. And I said, really, you know where you want to get to, it's just another trade. Okay. Don't make any one trade too important. It's just another one before the next one. Everyone with me? Okay. And I'm talking about, you know, my process and what I went through. But, you know, try it once when you're at a major support level, you get long. If it takes out support, you have your long one, you have a stop in for two that liquidates you and gets you short. So anyway, something to consider in your trading plan. Everything higher, dollar, another lousy week. You know, doesn't look like this is it. No divergence yet, but we are. You know, are we going to go towards this marginal line? Okay, so next week it's coming in around 1040, so that'd be another 100 points lower. But pretty ugly week. I don't know if we're going to get any big reversal. I doubt we'll get a reversal week. And risk looked like it wanted to come off yesterday, and here we are. It's, you know, a good week. We're actually unchanged to lower on the week in NASDAQ yesterday.
You,
No more.
you
Well,
know,
we're
Dale,
still,
I was just going to say we were talking about it in the S&P room just a few minutes ago about, the S&P had a bearish outside day. The DAX was a big reversal, and look at the markets right now. I mean,
yeah,
they're upending anybody who stepped in front of the markets yesterday.
yeah.
Yeah.
So, you know, that's a sign that we're probably going to, you know, it's like the market has unfinished business at new highs. This probably,
Yeah.
you know, look, I'm a bear, so, you know, longer term, um, didn't hurt me to be a bear here. Okay.
Are you
So
are
go
you
ahead.
still on the short side, or did you cover up your shorts?
No, I just have SQQ puts, which yesterday were SQQ closed, I was even. That's going to change today. Um, but yeah, they go out to January, Blake. So I'm
Oh, got
really
it.
not.
No, the one thing that I mean,
So this is
I
what I'm looking at is that you know we could go to new lows in SQQ. It's one of the only ones that didn't. But you know, it
there's
actually is
one.
closing around 78.6 here.
Yeah, the S&P, it's gonna depend what happens today. But there's one thing in the FX market right now that suggests that this market could really rip higher. The
What,
one
the
thing that I'm
Canadian
looking at, no, it's
or Mac peso?
this the dollar max. Yeah, the dollar max
Okay.
turned at the 618 retracement,
Mm,
which is basically where we're at right now, but we overshot it by, I don't
yeah.
know. We went from 1940 to 1950. We're at lows right now, and that in itself, tells me that the S&P could really rip higher,
Well, the
especially if,
Canadian said that last week. So the Canadian's the anti-VIX, right?
yeah, it is.
And that's why I was tempered on this recovery in the S&Ps is because everyone knows that listens to me how bearish I am in Canada. I mean, I'm looking for much lower numbers. 36 has been taken out. Yeah, we could get a bear market rally any time, but this is not a good look.
Oh no,
Um,
no, it's not. It's heavy and it's trading heavy.
yeah, it'll be down here in the next month or so. I'd love a rally back to 37. So if Powell disappoints the Doves, maybe that happens next week. We get some type of that would only be about 38% back of this decline from the crash low, which was a
Yeah, but
crash high.
then you'd have a false breakdown, and I don't know if how comfortable I'd be,
Oh,
being on the short side. That's
yeah,
the flip side to today. Like, let's say Powell doesn't really show his hand all that much, and anybody who's dollar bearish is disappointed. So that's the
yeah,
what I would think would be the big risk. But from a trading perspective, one of the toughest things to do right now is to lean into dollar shorts after having an extended move that we've already
yeah.
seen.
It is hard.
It's hard, but is
That's
Powell
what you
going
do.
to? Yeah,
Yeah,
that's what you have to do when there's momentum behind you. And is he gonna say anything that really suggests that he's not going to keep the door open? Hey, we've got to see the data between now and the next Fed meeting in September, which is the most important, is going to be the jobs data. And why would he shut the door right now and say, yeah, I don't care what the jobs data is. You're not going to get this ultra loose policy, especially when the market's already pricing in it. It'd be silly for him to do so. He's already opened the door. The market's pricing it, and the Fed doesn't like to surprise. This Fed doesn't like to surprise. This Fed is not Alan Greenspan Fed,
yeah.
right?
Okay,
Yeah.
okay, Danielle.
But no, I'm just saying, but it's true, right? I mean, I'm not Danielle. But
Uh, I'm
you know,
fed up, Blake. I'm
I'm,
fed
I'm,
up.
I know it's a recession. We've been in recession for 2 years. Damn it.
Yeah.
Um, sorry.
I'll give
It's
you 10 minutes of my time.
that's bad. But
All
anyway,
right.
yeah.
Anyway, you've become a Fed watcher.
I
Uh,
am. No, I mean,
you know what, how that happened to you? I'll tell you how. It's reading Jim Walsh for as many years and talking to him
I
as
tell you,
much because he talks about the Fed all the time.
he
That
does,
was
and he
his.
watches the Fed closer than most people, and I think he's got a better read than most people. And he's Dale, I'm so happy you turned me on to him just because he's just a really genuinely good person. I'm
Yeah, I
meeting
love
with
the
him
guy.
every week. It just, he's good at what he does, and he's really, I think, underappreciated in the markets. So
War, good God. I tell you guys, if there's any kind of flare up, that we're just going to blow out of here. Okay. So, so you have a hedge on. Long oil, I think, is a hedge. You know where you're wrong.
Yeah,
And
that
everyone's bearish oil. Most people are bearish oil because it's the global economy, right?
I don't know. I've been sitting here saying I've been it's been more of a head scratcher for me, Dale. I
Neutral.
couldn't figure out for the last 2 weeks why the hell crude was just dropping the way it was. And then today, obviously we're rallying from the support. So technically, I hear your argument, but yeah, like why would anybody want to be short or, like short crude? I've been saying that for like 2 weeks, yet it's been, dropping like a rock
Well,
for the last two
well, I
weeks.
had a
So
good rally back to 80 from this level. So, basically what you're doing is you're just playing the range right now. You might have a bias of where you think it's going to eventually break out, but I don't know. But I know I want to be short under 72. So, and then if you buy it and you have a lead, let's say you have a $2 lead in oil, you should be able to take all the risk out of the trade and be at BE and have taken some money off the table. And you know, it's a riskless trade. So, that's why it's so, really an edge when you get a lead early on a trade. The sooner you take the risk out of the trade, you know, the longer you'll have a career because you don't have that same type of pressure when you go to BE. Well, I
right.
mean, where's the
Well,
pressure?
hey Dale, do you mind if I take over the charts from here?
No, no, I don't want to be a hog, man.
Well, I actually want to bring in, and I know Ryan's still out, and he's going to be out on Monday too. I think this is his. I don't know if it's his last holiday into the summer, but we got Kman here to dissect all of these comments, which, by the way, Simon, I know you're listening in, and Simon's like, Blake didn't know where the newsroom was. I know exactly where the newsroom was in the chat room. Last night in Asia, I think I was the only one around, so I wasn't, I know we have lurkers, but
What's his name said something
oh, Simon,
about me.
he's harassing me. Simon's been in our community for like literally a decade, and I
No,
love you,
I mean in
Simon, by the way.
Japan, that guy that
Oh,
K-Man was talking about.
well, no, Ueda had a lot of comments, and he had to basically defend himself in front of Parliament about his actions in this raising rates. And so, how did you read those comments? Okay, man, my initial instinct was, hey, he didn't cower. Okay, man,
He didn't. Good morning, everybody.
hey, good morning.
GIF. He
He
didn't.
didn't cower like he didn't cower like a little weakling. He stood up
He
for
did. He did say
his
it's not my fault. It's the market's fault overreacting to U.S. data.
yeah, that's right. He blamed it on the US.
Yeah, he blame it on the U.S., mate. No, but he says that, and he's well, somewhere he got the data behind him as well. He said like if inflation does like as we think it will do, we continue to raise rates, and yeah, that's why Dorian then initially came down. But he did like he did it the Japanese style, right? Also mentioning that if things would go really like pear-shaped, they could adjust the speed and adjust the easiness and whatever. And so he said a bit of everything, but mainly he was keeping a pretty hawkish stance, and so he didn't say to anyone that oh yeah, because of this we will stop hiking. Not at all. So he didn't give that to the market at all.
Yeah. Yeah, and then I mean you had Suzuki had to play like,
Yeah,
devil's advocate on the other side. We haven't deflated, you can see it right here. We haven't fully
yeah,
defeated inflation yet. It's like
yeah. And then Kato came on as well. Trying to support the equity market, saying that they are not ready to sell their ETFs.
yeah, I mean, the fact of the matter is, and let's not forget this, guys, Japan is the largest army of traders in the world, like the individual investors in Japan. You know, when we talk about Mrs. Watanabe, it's not a joke. I mean, it's a joke, but it's like literally almost every it's we are becoming Japan. It's scary how we're kind of becoming Japan in a lot of different ways. But, you know, US investors are almost becoming as aggressive as Japanese investors are. So that you have to have like a bunch of comments from all different whether it's Ueda or whoever it's going to be, to really try to calm the nerves of investors in Japan. And that's really what we got here. So the takeaway that I got, Kman, and correct me if you feel differently, or let us know if you feel differently. They still can normalize rates further. Japan can, especially if the data supports it, and the data remain the economy remains strong, and inflation remains where it's at. They still want to normalize rates, and that's my big takeaway from yesterday.
Yeah, but then we have to come back as well to what Japan is, right? I mean, they are not going to hike 25, 50 pp's at the time like any other central bank may have done after COVID. It's still going to be a relatively slow process, but where it is now starting to matter, or where the market took really note of it, is that if the rest of the world slows down and Japan hikes, that's where the big changes in interest rate differentials, and that's where the big moves in yen could come from. And it may not be the end over the longer term, especially as we've seen, like for most Fed and ECB speakers, is that they kind of already, well, a Fed for sure, that's a done thing, but even the ECB members speaking over the past 48 or so hours, they seem to be penning in September for another cut as well. So that is going to reduce interest rate differentials. That's where the market is going to trade upon, right?
Yep.
Now, yeah. Now, I've mentioned that in the room a couple of times, and I showed it on the Flow Show as well. Weekly dollar yen chart, and the cloud, which is something that the Japanese community keeps a very close eye on. They are cloud traders. Look at what happened, and even if you go back all the way to 2021, since we started to normalize rates elsewhere, barring in Japan, that thing went above the cloud. We've traded inside a couple of times, but we've never dropped below, not even in the big setback that we saw, the 20 big figures that we came down from the highs. And the top of the cloud today is bang where we are now, 146 the figure. And I think that may be significant for the next trading sessions, where
How
we
about a right shoulder at 52? I think Greg is even looking for 52.
Oh yeah,
Broke
that's
it up
possible as well.
yesterday.
But there's many things to consider, of course. But
Yeah, there you go.
it
Yeah.
is all possible that that we actually go back there if we don't drop outside of that cloud.
Well, let's talk then more about the dollar. I appreciate your look here, Kman, and Ichimoku is actually a Hindu word. I'm joking. It's not. It's Japanese, of course. Everybody. That's why. That's yeah, and it's succinct. Exactly what Kman's saying. Everybody in Japan, they look at these Ichimoku clouds, and they're very important to their style of trading. But let's talk about PAL. So, what's PAL going to do today? I mean, I want to talk about this because we have, obviously, everybody's going to be looking at what Powell has to say, and the question is he going to be able to rein in this dollar weakness, or is he going to be able to stop this equity market rally? I mean, what is he going to say today that could possibly do that? And I do want to point out, let's look at the S&P really quick. When you're looking at the S&P, let me go find it real fast. It's right up here. You had a literally a bearish outside day. Now it's very early in today. I mean, what happens today you know, this is going to either wrong foot anybody who got short yesterday and we're going to all-time highs, or we're going to go lower. And I've heard a lot of people say, oh, this is going to be a non-event. You know, Powell's not going to tell us anything different that we don't know. But based on the market's reaction yesterday and the sell-off and the reversal that we got yesterday, I think the pain trade is new highs. And the what's going to send us to new highs is if Powell is he plays into whatever the market's giving him right now, which is basically keeping the door wide open, and and maybe referencing some of the weaker data that we've seen, and keeps more of a dovish stance. And if he keeps more of a dovish stance, why can't stocks go to all-time highs, especially, giving us the reversal signal that we saw yesterday? The pain trade will be at new highs. And and remember, it is Friday, and whatever trend that we develop after Powell is going to be very hard to fade. I think it's going to end up being a pain trade. But let's hear from Dale. What do you think about Powell today?
I have no idea. Just I'm trying to just trade the charts, react to it. I don't care what he says.
Okay.
Well, I'll deal with whatever. I mean, I haven't cared for a while. And we all saw the yields. To me, really, when you think about it, is if Powell is going to do what what everyone's expecting, what's a big surprise? I mean, we've seen the 10-year yield drop once we took out 420 like a rock to 370. So is this really shocking news? That that rates are coming down. The market's taking rates down, regardless of what Powell does at Jackson Hole. I think it's the market. I think the Fed follows the market. Okay, so there you go. I just don't think it's a big surprise. If we're going to 3% on the 10-year, that'll be, that wouldn't surprise me, but that would surprise the market. And I don't know if that's going to in the long term be such great news, because I think it means that the economy is pretty weak, right? Yields are dropping like that with all of our supply, and yields are still dropping. That's what I think lower rates are saying, is that we're slowing, or, um, there's a lot of slack in the system. So, yeah, the market's is celebrating it because of
Well, Kman,
PEs.
what do you think? What are you expecting out of Jay
I
Powell
wasn't
today?
finished.
Oh, sorry.
That's all right. Now I am.
Okay. Kman, what are you thinking out of Powell?
Well, I think he's going to try and steer the usual line. He's not going to give the market 50 on a plate, but does the market want to be long dollars on the back of it? I think barring perhaps a bit of a forced buyback of dollars, this market really still wants to be short dollars. But the way I'm going to trade it is perhaps a bit like if you want to be short dollars, I wouldn't do it against stuff, and that may be a surprise now, but I wouldn't do it today against stuff like yen, for instance, because if he gives something relatively dovish to the market, yes, dollar yen will decline, but I think that risk is going to pop up, and then stuff like sterling yen or Aussie yen, Kiwi yen are actually going to shoot on the back of it.
Yeah, you could definitely see a squeeze there, because with all these yen pairs, we're basically nudged up to like the 38% retracements. These are all weekly
Look
charts.
where sterling yen is, 100 DMA. If that closes above 192 today, I find it bullish.
Yeah, I mean, there's the 200 DMA right
200
there.
DMA, so
Yeah, no,
yeah,
I
200.
agree. I agree with you. And that's the thing is you gotta be really selective on what you're trading. I want to pull up the euro And
You know, I have a
everybody,
question.
go
Why
ahead.
be long these crosses when the yen is an anchor on the trade? You know, really it is. I mean, why not just be long cable instead of the guppy? Between the two, the relative strength is in just being um, long the pound against the dollar without throwing the yen into the equation.
I'm
Because
with you,
you know maybe
Dale.
the huh?
I said I'm with you there, but I think what K-Man's trying to point out is there's probably stops above there. So maybe from a
Yeah,
trading perspective, you
Yeah,
could get
and no, but also look at what happened. I mean, UA didn't give anything to the market, yet the yen pairs are not lower. They're actually, if you look at sterling yen, for instance, they're actually a bit higher. And I like to trade crosses, Dale. I like to sometimes look a little bit away from the dollar as well.
yeah.
Yeah, I mean, if he gives us anything dovish, really, that is leaving the door open to a 50 BP in September, for instance, which I don't think he will. But talking about we can cut many times, for instance. That's the other thing that he may say. Then I'm probably going to jump in stuff like gold again, or I don't know. Yes, just then it's probably a case of buying cable through the highs, and that thing is going to 134 perhaps.
well, that's in my opinion. And Dale,
Yeah.
I'm with you because I'm actually long some sterling from yesterday. Is we're
Mhm.
breaking out. I mean, this thing breaks out above 131.50, and this thing has gone to 134 because it's a big, this is the 78% retracement. And let's not forget what happened in the with UK PMIs. That right there, and this, remember, guys, this is one of those capitulation type of moves, and that happened in Asia during, thank you. We can all thank Liz Truss for that one. That happened in Asia, and that has marked the bottom in sterling ever since. And I don't know if we're going to see, parity again, and in my career, anyway. And looks like sterling wants to break not only to 135, but probably a lot higher than that. And if you think about what that means to the dollar itself, I mean, that could mean, euros trading into 115. And I think this breakout's big. One of the I want to point out one other thing here real quick. And I know we have Canadian retail sales. Look at how shallow the retracement has been in the euro. The 24% retracement just of the most recent move is right here at 110.80. That's only 30 pips away from where we're at. That's also, big trend line. That's the last trend line that I have for this triangle. It's broken above it, and we're sitting and consolidating above it. So unless you put the euro back below 110, I have no reason to be on the short side of the euro anymore. And I know, and it's against what anybody from a macro point of view is going to tell you. Why would you want to be long euros over the dollar? Why would you want to? I don't know, but price is telling us we should be, right? I like,
By
you
the
can.
way, this is not going to help Europe out at all
Oh, hell no.
because they're a big, Germany's already soft in their, export economy.
Oh, why? I mean, why am I going to
Stronger
want to
euro.
travel to? Yeah, why am I going to want to travel to Spain or Portugal or Greece when I'm losing buying power? I mean,
Yeah.
it's gonna hurt Europe, and I'm doesn't matter whatever person you believe is going to be elected as U.S. president. Either one of those candidates are probably going to end up over time weakening the dollar with deficits. And especially if it's Trump, he's not going to mind a weaker dollar. It's going to help U.S. exports. So, if he wants to continue to build the manufacturing base, he's going to lean on the dollar. He may not publicly say that, but I know he's probably doesn't mind it. And so anyway, it's one
But
of
if
those
you say
things,
it
guys, that
publicly.
you look at the dollar and it looks like it wants to continue to weaken. But we're gonna obviously have some clues here, maybe in the next hour or so. But let's look at Canadian retail sales. K-Man, do you have any exposure in Canada
Oh,
right now?
tiny crap left. Just watching that 135.60, and that's it. I've got very little risk in any of the dollar pairs. I'm short, still short euro. Oh, well, back short euro sterling as well from the other day, but got little exposure in the rest, but I got my finger on the buzzer for well, I don't know Canadian dollar. I was saying in the room, and it's coming out by the way. They are a little bit better than expected. 0.3 on the core,
Yeah, it's a little negative there.
uh, and but minus 0.3 on the headline as expected. I Donna Canada to me, it looks as if the Canadians, all those people being short Canada, they need to either get washed out or give them time to get out of positions because the Canadian dollar is doing better than what most expected, and then perhaps it's going to take another side. And you know what? I mean, it's what I said in the room as well. I'd rather now start to buy dollar CAD in all fairness when it starts to move higher instead of trying to catch knives.
Yeah,
Wait for it to start.
and Dale,
Sell
I'm
every
gonna
rally.
Sorry?
Dale,
Sell every rally.
you were bearish dollar CAD, and I'm just going to reiterate something. And we were just talking about this in the chat room. And by the way, before I show you guys this, this is the conversation we were just having about the CAD, and this is the chart I'm about ready to show you.
Yeah.
All right, this is that CFTC data, and it's definitely not all the data out there, but you know, you can see this is a let's go look at
There
history. I
could be
mean,
a little reversion there, huh?
look at that, Dale.
I know
Have
that's
you ever
why
seen anything like that?
that's one of the reasons.
Yeah, I mean,
A
like I
major
know, and
reason.
that's why I'm like everybody thinks that we're going above 140 because Canada's, you know, economy is going to go
Weak.
to
Yeah.
crap. But
The real
this chart right
estate
here,
market.
yeah, this chart right here tells us we're probably going to see, like Dale said, we're probably going to see the low 130s. You know, and look at what the dollar is doing against everything. I mean,
Could it be OIL?
It hasn't been on that bus for a while. It hasn't been. I mean, it's very random, the correlation right now between Canada, oil, Norwegian krone oil. Look at oil shooting. Norwegian krone is actually weaker.
yeah, he's exactly right. I mean, and but this is going to be another interesting one too. You want to look at a long term, you know, if the dollar really does break down, look at this. That's the U.S. dollar Norwegian krone. That's a long term chart. And I mean,
Yeah.
if we start breaking down, there is and Stelios, you know, he makes very rare appearances here. But when gold goes up, silver goes up, or Norwegian krona goes up, he's gonna destined to be on our show. So, you know, if you see the dollar in Norway move lower, he's gonna come running out here and telling everybody that that Norway's, you know, going through the roof. He's been a very big.
That'll have another message too. Because you know they have that huge sovereign fund,
Oh yeah,
right?
they're long equities like
Yeah.
nobody's business. I mean,
Yeah.
look,
So I mean,
Yeah.
you know, and so you know, I think that a sell-off in the market, even though it doesn't look like it's imminent, is going to be part of the bear case there
yeah,
as they repatriate.
yeah. If stocks ever come down, all right. I mean,
Or they're moving offshore to emerging market stocks that, you know, those countries that were under severe pressure have dollar denominated debt. The dollar weakness is a, you know, panacea for them because they were being
so
squeezed.
what happens here, Dale? And I'm gonna ask you real quick. What do you think is gonna happen with VIX? So,
You
and I
know
know we
what?
don't.
I think that it's broken. You know, I argued against it for a long time, but it's a dysfunctional market, so I'm hardly looking at it anymore.
Mm.
Uh, so I mean, what it means, that was it. I mean, shouldn't have had that kind of move. That market is the most inefficient I've ever seen. You only know if you have an efficient market when it's under stress, and for the VIX to, you know, have that type of historical move with, you know, a 10% sell off in equities,
Yeah.
and then not make markets in that move, but just and then give it back in historic fashion tells me there's something wrong with, you know, that product.
Yeah,
So
that's true.
I don't know about the VIX. I'm just gonna pay attention to price action on the whatever I'm trading. And I'm not. I'm telling you, I'll never trade the VIX again or any of its products.
So,
So that's
Fed
what
Chair
I think of the
Powell's
VIX. It's broken.
it's broken.
It's broken.
Fed Chair Powell speaks in an hour and 25 minutes. And you know, just make sure everybody's clear. An hour and 25 minutes from now. So go grab some coffee. If you're in Europe, go grab some lunch. But be in front of your computers in an hour, just a little over an
How
hour.
about a Bloody Mary today?
Maybe a Bloody Mary is what is needed, you know, for a Friday for a lot of people, because it's 5:30 somewhere. That's for sure. But I know we don't have an interview today. We're gonna wrap things up, but before we do, I want to ask Kman, what's your number one idea right now going into the Fed Chair Powell's speech? What are you going to be looking at the closest right now?
Knowledge I buy gold. And I know I can't give 10 trading IDs, right?
No.
I can only give 2 max, right?
One.
1. Okay, dollars I buy gold. And hawkish, I think dollar yen hits 147.5.
That was two. That was two,
But I
Kman.
need to give both sides of it's only one idea, but it's both sides of the middle, right?
Yeah,
They'll
yeah.
help me out.
Okay, Dale, what are your best two ideas, Dale?
Recharge my battery over the weekend and don't try and make your week on a Friday.
All right, yeah, and then you
Be
know
patient.
that be
Yeah,
patient.
be
And I was going to say
patient.
those are some pretty wise words, because how many people have really taken in the entire week off, and they're here, you know, because they know it's summer, holidays.
Yeah.
Some people are probably pausing their holidays right now in another country or away from their home, and they're like, I'm going to trade today because today's going to be a big day. Um, how many people are doing that right now?
This emerging bearish trend in the dollar is a big deal. It's
I
going to have
agree.
repercussions throughout markets for many months to come.
I
So,
agree.
and it's just starting, guys. I know you know you didn't get the top. So what? You know, so tactically find spots. The market's going to give you spots for you to fade the dollar. And I think you could throw a dart against almost any currency.
So
The dollar's going to have problems.
I'm Dale. I'm gonna just for Friday, I'm gonna just, you guys can select whatever currency you want. But I'm gonna echo what Dale said. Now I want to just technically show you guys something. All right. This is a triangle that, you know, we've all been looking at for the entire year, you know, and really that's my fault. I didn't that just beeped on because I just did what I did. I made an adjustment there. But if you look at this triangle, we were consolidating for a year. We have finally broke, right?
Yes.
And unless we get, you know, back above 102.20 right now, because that's the breakdown point. If you go into the daily charts, it's going to be right here.
Okay.
Until we get above 102.20, there's no reason to be long dollars at this point. I mean, today we could get reason from the Fed chair to think otherwise, and I might be singing a different tune on Monday if we get back above 102.20. But until then, you have to look at the downside and what Dale is saying. And I want to just show you what just the minimum and maximum moves could look like in the dollar index, so you could think about what to expect. So if you think about like the minimum expectations of a triangle breakdown would be somewhere around here. And I'm gonna make these into a different color. All right. So there's blue, so you can kind of see it, right? There's your minimum expectations. Your maximum expectations on a triangle move is going to be right here.
The whole width.
Right. So now you just take this really quick, and I don't know if the breakdown point is here.
I think it was there, Blake.
Yeah,
That
it
was
might
a
be
longer
there,
term trend line.
or it might be there. Either, you know,
Okay.
a lot of
Yeah.
times it doesn't really matter, right? You can kind of get the idea.
Yeah.
But worst case scenario is you're making your way down to 98.60. Best case scenario, just on a minimum expectation, you're making your way to 97.80. But
Yeah.
look at where the longer term move takes you. So the bigger move, if you go all the way out, you have a move to here or a move to that longer term trend line. Now that longer term trend line goes back all the way to the way back. Let's go over to the weekly chart. That goes
To
all the way to the way back.
1905. Oh,
Yeah,
okay.
2000. This is basically, post GFC. So you're talking basically over a decade's worth of a trend line that we could go down and retest. And does that even disrupt the longer term uptrend of the dollar against other fiat currencies? No,
If we break down from there, it will.
that would be
If we
dangerous.
get what we had to the left from 2000 to 2007 from 114, we could retest those lows, take them out from 2007.
Yeah. There
Yeah,
you
I
go.
just think it's a crisis. It's going to be a crisis, and you could call me a conspiracy theorist, but I've always contended that a bear market will serve the purpose, not right away, but as time goes on and you start seeing McDonald ads, like the dollar's down, you know, but you could buy something there for $1. Remember when the dollar was down, there were ads like that.
Yeah.
But I think that this is going to be a problem for people, and they'll start to build fear about holding dollars, and the next crisis, and maybe it's a dollar crisis, get people to be willing to say, yeah, I'll take some of those CBDCs.
So
I'm ready. Yeah, the dollars, no, it doesn't work. I'll try anything else. I've lost, it's lost 20% of its value. Um, I think that would be enough to get people to say, yeah, I hardly use cash anymore anyway. Let's, give me something stable.
So Dale, and Kman, you can
I hope I
chime in
cheered
on
everyone up today.
you can chime in on this. But I started trading currencies in 2000 when let's see, my company was bought by the Wise Trade Group in 2001. 2002, I made the switch once US traders could start trading currencies. That's basically when I started, trading currencies, getting involved in the currency market. I think I probably got my first demo account and stopped trading equities basically in 2000, end of 2001. All I've known as a currency trader is risk on, risk off. Dollars the currency you want to own during a risk off period. We are the reserve currency of the world, and we're running deficits like higher than we've ever seen. And as a reserve currency, I don't know if that's going to necessarily be viewed as a good thing. And you go back to, Barry's like, hey, match up the S&P to the dollar. Here you go. What people don't, well, I wasn't trading currency. I was trading equities at this point in time. If you look at, post.com bubble and what the dollar was doing and what the S&P was doing, they were both declining at the same time. There's a lot of people that believe that the dollar is a safe haven currency, and I believe that in an event driven down move, like liquidity crisis because of Lehman Brothers, Bear Stearns goes out of business, housing market, European debt crisis. Yeah, people are going to run to the dollar in an event driven move. But if we have a just a bear market, Dale or Kman, and you see like the S&P, just spends 2 years, giving back 30 or 40% of its value. I don't necessarily believe the dollar is going to be a beneficiary there. And in the current environment, based on our candidates for president, both candidates for president, running the deficits that we run as a reserve currency, I don't necessarily believe the dollar is going to be what people believe it's going to be. And I think that a lot of macro analysts out there don't look at the forest past the trees. And
Yeah.
so go ahead.
I'm just saying that both candidates are not beyond foreign exchange controls. Okay, so I don't know. I've never traded or lived under foreign exchange controls. I don't know what that's going to do to, the business. What do you think?
I don't know. Kman, you have any thoughts here before we
I
wrap
sure
things
you.
up?
I'm getting a headache, to be honest. No, I
Well,
think there's, you know what? Every crisis, people try to look at the prior crisis. If there is one to come, it will be different because we had COVID in between, and since then we are in accelerated cycles, and we are still there. And you only have to look at how the market reacts in the bond market. We have rarely seen people running from one side of the ship to the other. So the next crisis that will come will probably have similarities that people will look at, but since there is a lot more money in the system, I think it's going to be violent, but with extreme volatility, but not necessarily kill the dollar or kill the stock markets because there's just too much money in the system. And we have seen that after COVID. If you look at the money, the cash that the central banks have thrown at the markets, and we are now trading around, what is it? S&P times 3 versus the low post COVID, and therefore I think it's all going to have different faces as the crisis before, if we get a crisis. But I do agree on one thing: if the crisis is US led, the dollar is for sure not going to strengthen. That is completely that is the one similarity that's going to be with all the other crises, and the correlation lower stocks, higher dollar will explode after a while.
Well, the housing crisis in the U.S. was it was U.S. led, and it was a liquidity issue, and that the dollar ripped when Lehman and Bear Stearns and the housing market collapsed. It was U.S. centric and created. But you're saying that if it is a U.S. situation the next time around, the dollar may not be so lucky.
Yeah, that is what, if it's a crisis. But I mean, we are like what, 3 months away from US elections,
Mm-hmm.
and both are going to be fiscally expansionary, right?
Yep.
So there's going to be even more money coming into the system, and then it is possible that you really avert a crisis just because of more money in the system as well. It's just too early to tell. I mean, making all those prognoses that the dollar may go down. I'm not discussing that at all. The dollar may go down. The dollar may be even started a long-term trend lower, but it may have a completely different pace
Reasons.
than what we've seen before. And
Yeah.
imagine it's fiscally.
yeah. How about neither side accepting an election result?
Yeah, but that's
And we don't know who the president is November 5th.
yeah, but
We
that's
don't
going to
know.
weigh on the dollar, Dale. But that is nothing to do with economic politics. That is just
Oh,
a sandbox.
it's confidence.
Yeah,
Everything is
of course it is
confidence.
confidence. So in the short run, it should be even it should be it should be negative US in any case. And that's probably going to weigh on equities, weigh on the dollar at the same time, because if you have a confidence crisis in a country, your currency goes down, right? And your assets go down.
Yeah.
Even the bond market is may lose some confidence, and things may go completely opposite
So
ways.
yeah. So Blake, this
But
isn't political because I'm not talking about any biases. But do you think we're going to know who the president is on election
No.
day?
No.
well, I mean, that's
No.
who's telling? I mean, it's just speculation, Dale, right? I mean that we won't know who the next president will be. I mean,
That's not the reason why we won't know. is because both sides will not accept the results and say that was a problem with the results. Okay. So it's not who wins, it's neither side accepting the outcome
Yeah,
of
but
the
how long do
election,
you?
whichever way it goes.
Are you telling me that we are going back to what I know? When was it? 1700s or 1800s?
I've never seen. Look, you know what? We're not going back to. In my lifetime, this whole thing is brand new to me.
Mm-hmm.
Okay, I never talked about these things before, so I don't know. I can't look back. I'm not a historian, but I can't. It's probably more analogous to the 1860s than anything else. It's divided up families in this country.
Mm-hmm. Yeah, but that's
People
that
can't
that is that
talk
is
to
what
each
you
other.
think that may happen, which is catastrophic, right? I mean, that is a catastrophe scenario. But I
Well,
mean,
I don't know what I'm concerned.
well, I
Uh,
mean, but yes, that is what you're saying. That is the catastrophe scenario, and then you lose confidence, of course, in whatever instrument you're having. But I mean, I was just talking about. Let's assume that we get a winner, and we know who it is. It's
yeah,
probably going to be virtually with some differences the same expansionary
yeah,
program. And actually, if you look at it, I'm not even sure equity markets are going to go down. Whoever wins the elections, assuming that we have a winner. If everybody contests everything and you're going into 2025 without a president, I let you guess just once where the dollar and where equity markets will be. But I don't think it is somewhere a plausible scenario. But do you put it at more than 50% chance?
yeah,
Okay. And then you
yeah.
go
That
into
neither side are going to accept it.
And that truly
capital
could be the,
burns.
go ahead.
I mean, we're back on the 6th of January then. The capital burns.
Yeah,
That's the
well,
scenario.
I'll tell you what, we can, and what we're going to do is we're going to wrap things up because I'm going to have to do the morning edge soon.
Okay.
But what I'm going to say here is one thing we
Gold's
can
going.
look at,
Okay.
we can look at the dollar and say it's broken right now, and it really breaks below like 100. You look at, this 99.50 level, we start breaking below there and the dollar looks very dangerous. Like it's a slippery slope below that. And I don't think any one of us can deny right now that the dollar is looking extremely vulnerable. And we have to think about that, especially when you start looking around, you're like, why in the hell would I buy X over the dollar? Why would I buy, euros over the dollar? Why would I buy sterling over the dollar? Why? And everybody's like, I don't know why. And yet the market is leaning into selling dollars right now. You look at the Aussie, you look at the Kiwi, those currencies look extremely bullish. The Aussie is nearing, it's already broken, multi-year trend line, and it's approaching triangle resistance. You look at the Kiwi, this week, we're going to close above this multi-year trend line this week if we close up at these levels. You look at the dollar, it looks extremely dangerous. No matter what your views are, you have to also think stocks don't look bearish.
Yeah. So forget about all the things I talked about. Just make money.
Yeah, well, just it's like watch price. Price
Yeah.
doesn't lie, and it's gonna reveal the truth. And a lot of assumptions that we have, I'm not saying you or I, or I'm just saying everybody, a lot of assumptions that we have are going to end up being wrong because price is going to be the ultimate judge and jury of what happens. So anyway, I want to say good luck today to everybody, and remember this, I said this months ago, and it's really come true. This is the most volatile summer I've ever experienced in the markets. I can't remember a more volatile summer in the last 20 years in FX. I'll just put it that way. I don't. Every August is so damn slow, but with this election season, as contentious as it is, monetary policy we're so unsure about so many central banks. BOJ, FOMC, you name it. You know, Bank of England. Who the hell knows what's going to happen there? We're getting
Well, you know
volatility
what?
like it's nobody's business, and it's
No, more
awesome.
importantly than that is that our community, for well over a month or so, heard the bearish argument in the dollar and also were given tactical entries to take advantage of it. So anyone who's been around here hasn't been wrong-sided on the dollar, and we are ForexAnalytix still, okay? So no one was misled on a change, a major change of potential market direction. Um, I don't remember too many long dollar calls coming out of here over the last couple of months. So I think we prepped the community and probably saved a lot of heartache because up until recently, there were plenty of dollar bulls in my face. Okay. So now now they're with me, makes me nervous. But, we did our job. It was an important trend change and we were there before it happened. So great job, team.
You know, Dale, thanks for
Nice
guiding us
words,
every.
Dale. Thank you.
Yeah, have a great weekend. Thanks, and Kman, thanks for being here all week and covering the European hours. And Dale, thanks for guiding us every day. Really appreciate you guys.
Everyone have a great weekend and don't just count your pips, count your blessings. We'll see what happens. We'll finish up August here pretty soon. And that means football season.
Yeah, it does. And
And it's also cool out here this morning.
ooh, I like that,
Yeah.
Dale. I
Yeah.
like that.
So anyway, get ready. Pumpkin time will be here before you know it. Yeah, there Tony's on it. What's your costume, Tony? What are you going to dress up as? R.N. Elliott? Oh, no, Greg has already got that costume. You're going to dress up as a rich man. All right. Well, look, thanks a lot, Kay, for all you do
I'll
and
wear
for being
a bowler
for
hat.
I thought
yeah,
you said
yeah.
you were going to wear a boner.
Ah, come on. Hey,
I thought that's what I thought that's what you said.
please. I'm living in Great Britain, so I'll wear a bowler hat.
Oh, okay.
Oh, okay.
All right. All right. Thanks, Kay. Have a great weekend. Blake, you too, bro.
Thanks,
And
man. Thanks,
and
guys.
everyone out there, enjoy the weekend. Get ready. Have your plan for next week. And we'll see you on Monday. Adios.